All right, here we go. Thursday, May 6th. Really quiet today. Very, very quiet. Tomorrow is the jobs report for May. I sent out my forecast to subscribers. If you want to get a copy of that, go quickly to pitbulleconomics.com. Sign up for a 30-day free trial of MMT Trader. By the way, special offer to all former subscribers of MMT Trader. I sent out an email yesterday. If you were a former subscriber, special offer. I will allow you to come back in at your original subscription rate. Send me an email at mnorman@pitbulleconomics.com if you want to come back in. I have people who took advantage of that and came back on board. Excuse me. Quiet day. Tomorrow is the number. We had the ADP payrolls yesterday, which were weak. 27,000 jobs created. They were looking for a number around 185,000. I think tomorrow's number, the forecast is 180,000 for the BLS number. Came in at 27,000. Now, the data that I went through today looked very strong to me. However, that could be picking up on higher wages. We'll see tomorrow. But I do come out with an exact forecast, a number, and if you want to get that, go sign up at pitbulleconomics.com for a 30-day free trial. I haven't spoken much about oil. We had a nice pullback. One thing which is very kind of bewildering, if you look at the futures spreads in Brent crude, they are in extreme backwardation. They're inverted. In other words, the spot month trading above deferred contracts, and that has just gotten more and more extreme as the price has gone down. So it's really kind of a weird situation right now, because that inversion is basically saying the market is tight supply-wise. And really that's the stories we're hearing with the OPEC cuts, with the big declines in exports from Iran, from Venezuela. I mean, that's what we're hearing in the physical market. And that is being reflected in these spreads, yet the flat price, just the spot price of the futures in both Brent and WTI. Well, WTI, the market is well supplied, as we know. We've seen a big increase in inventories. But even that, exports have been strong. But the spread in the Brent, the first and second month spread, August, September, against what we're seeing in the flat price, the spot price, is very bewildering. Very bewildering. Because that spread is really kind of signaling tightness in the market, yet prices have come down a lot. So I think the end of the story somewhere is still out there. I think we're just partially into this. And the funny thing is that those spreads, as I mentioned, have just gotten more extreme in their inversion, even as the price has gone down. So there's that. What else? Gold holding on to gains, actually adding to gains. I'm a skeptic about this whole bond market signaling a recession. Now, you see this story out there a lot, and I have given my explanation as to why we have seen the rally in the bond market and the fall in yields. I say it is technical. It is related to the debt ceiling. By the way, once they raise that debt ceiling, as a test to my hypothesis, to my theory, if they raise the, and they should do that soon. I think Mnuchin, Secretary of Treasury Mnuchin, told Congress, hey guys, you got to raise that debt ceiling by midsummer or we're not going to be able to pay our bills. And of course, what is the debt ceiling? The debt ceiling is an artificial constraint. It's just a political constraint that was put in there a long time ago. It shouldn't be in there. They should get rid of the debt ceiling. And the fact of the matter is, every once in a while when that thing comes up to be raised, what they do. Congress just said, okay, we're just going to suspend it. They don't even raise it. Just say suspend it like it doesn't exist. Because it doesn't exist. It's just an artificial constraint that was created. It's ridiculous. But anyway, when they raise the debt ceiling, and here's how we'll know if my hypothesis is correct, because when they raise the debt ceiling, and ultimately they will, we should see bond prices come down and yields go back up. And if that happens, then it's proof that the whole thing was technical, related to the pressures that came about as a result of the debt ceiling and the Fed bringing bank reserve balances down, and has nothing to do with any recession. So we'll see. So yeah, there's that. But it's a quiet day. It's been a very quiet day. And we'll see what happens later on. That's it for now. Bye-bye.